Hey everybody, welcome back. Well, we have a lot to go over between what's going on in Argentina, China, what happened with the Fed, and what is happening with our own markets here and how we're going to profit from it. So let's just jump right into it. If we take a look at the ES and what's going on here, the S&P 500, I want to point something out that I think a lot of people are missing. If we take a look at what's happened since the beginning of January, we're obviously going to get that tax selling of capital gains that they lock in. You have not had a lower low close, meaning you have not had one of these bars close lower than any of the other bars. We're in March. And so that's a really important distinction. Something else that I want to point out, and I learned that I can click this little button over here. I'm always excited to show people new things that I learned. Click this arrow, and now I can just keep clicking along. But here's something that's really, really important. If we take a look at this, here's November, and that was the Fed meeting here where he said we're not going to raise rates anymore. And we just come to the next Fed meeting, which was here. And then we go to the next one right here. Now, what we're going to note is that we have another one right here. Now, what do these all have in common more than anything else? Click that off and remove that. What do they all have in common? Well, the market just keeps going higher. Every time he speaks, we digest what he says, and then we just go higher. And why is this happening? Well, this is happening for a couple of reasons. He's saying all the right things. We're going to stop raising rates. Well, that's good. We see rate cuts coming. By the time we got to here, it was, we might cut 75 basis points. And by this time, we worked ourselves into a frenzy from no rate cuts or no rate hikes. Somehow between these two meetings, we got into 7 rate cuts. And I'm not really sure how that happened, but it happened. And we were excited because we're going to get 7 rate cuts. By the way, it's never really happened in history like that. But it's an unprecedented move on what he's done to the economy by raising rates that way. But now we're at that point where we're seeing that change in language. And we're going to talk about that change in language because you must be aware of it. And the reason you must be aware of this change in language is because everyone's going to be focused on CPI and PPI. And what you must focus on is the new language that was said, and you have to focus on that new data. Okay, that's what's really going to be important here, and we're going to get to that as well as some other things. So we take a look at the ES, you can see that, and then we're just going to take a look at the NQ. I'm not going to spend a lot of time pointing at oscillators and indicators today. We're up. We're continuing to go up. The market's going up. There's not a lot there. We are going to look at some of the S&P indicators just so you can see where we are in the food chain. But again, here we are, and here's the high. And we can see what's happening. And there's very little to say here, guys. I could mark the same things over and over again. And all we did was come back, retest that level, and hold. Now just drop this to a daily, and you'll see it even clearer. That's all we've done. What did we do? Well, we retested. Then what happened? We went higher. I mean, there's really not much to add, and there's really not much to say there, is there? Now, this is where it gets kind of funky because the RTY is continuing to do RTY things, meaning that the fact that we cannot break out of this multi-year base is just, it's really frustrating. Now, this might finally be the time that does it, and then we saw what happened with Friday, and then we sold off even though the bond market rallied. A lot of that had to do with some fluctuations in currency risk. People are a little bit worried about Japan and what's going on there. We're not going to spend a lot of time on that, nor on China. We might do that later in the week, but just be aware if you are to look at this on a weekly basis, all you've done so far, after we take a look at the daily, all we've done is and stay above for the longest period in time in 2 years. So I think that's a really important distinction. So most people are not going to look at it that way. And I think that's a really important distinction. So for me, what I need to do is I just need to focus on these levels and make sure that we hold there. If we drop down to the daily, people are going to go, we're rolling again. I don't know that we're rolling again. I see us constantly battling this level, battling it, try to rally over it, reject it, rallies over it, pulls back, tries again. I actually see us making higher lows. If you want to get super technical on it, I don't really need a lot of indicators to tell me that. You should be able to see it for yourself. And on the weekly, despite what we saw and the pain that we saw, this is where we're at. Now, I do expect that we're going to see the regionals rally. And, we didn't really see that, right? We actually saw that on Friday where we started to, here we go again. We're going to sell back down. I don't know that that's going to be the case here. I think that you might just have a little bit of jitters, and we're going to have to go there and go from there. But as I pointed out, and I will point out again, we closed over the 55, and then we just rejected it again. So are we really over it or not? You really need the higher high follow through, and we didn't get it. You take a look at XLRE, and we were over that 55. I'll get rid of these because I think this is really important to note. We got over, and then we're still over, but you're hanging on by a finger here. And so we're going to have to watch this, but I do think that these are two sectors that you really have to pay attention to. So if we focus on those two sectors and we pay attention to them, that's going to give us some indication of what's going on in the bond market. Now, if you take a look at the bond market in and of itself, and then if we just drop this down to, let's just do a 1 minute, and then we'll turn this into a line. We can see right here, this is the Fed meeting, and we can see exactly what's happened since then. Now, again, this is based upon a move out of China, and people are a little scared. Are they going to devaluate the currency? And what does that mean for the market? We're going to have to see what they do. You never know. We really never truly know what they're going to do. The rumors, are they true? Are they not true? I really have no idea. I will say this, that if you take a look at like XLF, that is a pretty decent move where people are panicked a little bit on it. And we saw major reversals, and I think they're major reversals on names like Goldman that clearly broke out of like multi-year, like look at this. Like it clearly broke out of like a multi-year base only to be rejected. I mean, that's a 3-year base, only to be rejected on Friday. Coming out of that, I'm going to clean that off because it's bothering me. And you could see that right there, right? And you saw with JP Morgan too. Now, the best thing that could happen is these things get smoked, because if they do, I'd go out there and be net buyers of them. But that's very different because I really like the DPST trade. I really think that that was a good idea. What I think is a good idea and what's happening are two different things. What you did note is you noted that nail really didn't break down either. But I think it's important for us to understand the change in language and what this means for you, because you need to understand what you're going to have to start focusing on going forward. Now, there was a major shift in language. That major shift in language by Powell is something that we really need to pay attention to, because a lot of people are trying to figure out why the bond market did what it did and how we can profit from this. Well, we're going to just get into this so you understand. It wasn't what he did, it's what he said. So anybody can Google this, and here it is, transcript of Chair Powell's press conference. So anyone can go out and just Google this exact, and you will find this. I think it's like 25 pages. And it's literally line for line, and here's the date associated, and this is the preliminary release. And I just have highlighted dual mandate because this was the dual mandate speech. And this is when he shifted. He knows that financial conditions are easing, which means that inflation is here to stay. We all know that he raised the PCE from 2.4 to 2.6 as far as his indicator, and that's him saying that inflation at 3% might be here to stay. It's a nice way of actually saying that, right? And we know why they're doing this, right? We are in an election year. You do not want to see people lose their jobs, so we are seeing some issues. Now, he did have another speech on Friday where he has like a roundtable event. And when he was there, he got lambasted for leaving rates where they are, specifically from people that are trying to buy equipment, such as farmers, who are talking about the unprecedented rate hikes and how it's just making it really hard to buy equipment or do anything to expand. The purpose of this is to understand what happened and then what happened in the bond market because of it. And then how do we profit from it? So the words dual mandate. My colleagues and I remain squarely focused on dual mandate to promote maximum employment and stable prices. So what we're going to see here is a change in language. We've been focused very clearly on CPI, PPI. They came in higher. Everybody panicked. Now we're talking about the dual mandate, and we're here to promote maximum employment. So you're always looking at the language and how it shifts. We've gone from cuts to 7 cuts to no cuts to now we're worried about employment. Okay, so these are the things that people have to pick up on. These are the nuances. This is when the speech can be more important than the action, right? Usually it's what they do, not what they say. He's telling you what's coming, and the bond market responded to it. So did the equity markets, and we'll get to that. The economy has made considerable progress towards our dual mandate objectives. Inflation has been substantially eased. Labor market has remained strong, and that's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured. The path is certain. We are fully committed to returning inflation to 2%, but yet he raised the PCE to 2.6 versus 2.4 as far as their goal. All right, a couple more lines here that are kind of important. We knowingly reduced the restraint too soon or could have resulted in reversal of the progress. So we don't want to do it too soon and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint or too little could unduly weaken the economy. And considering any adjustments to the target for the federal funds rate, the committee will carefully assess incoming data, outlook, and the balance of risks. We do not expect it will be appropriate to reduce the target range until it has gained greater confidence inflation is moving substantially down towards 2%. Of course, we're committed to both sides of our dual mandate. There it is again. An unexpected weakening in the labor market could also warrant a policy response. So, yeah, we care about the 2%. That's our goal. But of course, we're still committed to both sides of our dual mandate. if people start losing their jobs, we would go there. Now, you can go back to a year ago when he was in front of Warren, and Warren said, well, people can lose their jobs. And he's like, well, yeah, that happens. Okay, this is a completely shift in the way that he's been speaking. And if you go take a look at when the market rallied, and we're going to do that, when you go take a look at when the market rallied on his speech, it was exactly right around when he said that. Now, he was then asked by several other people and they questioned him on this. I think that they were right in doing so. I took a snippet. I'm not going to go through all the questions, but just a question of, is there even enough data for you to be able to, and this is a partial after she asked an original question. We'll take things that can happen during the intermeeting period if you look back, unexpected things. So I don't want to dismiss anything, just so you could say the committee wants to see more data, gives us higher confidence that inflation is moving down substantially towards 2%. I also mentioned we don't see this data right now, okay? Commit wants to see more data that gives us confidence that inflation is moving down substantially towards 2%. I also mentioned that we don't see this happening. So he's telling you that I don't see inflation dropping. But if there were significant weakening in the data, particularly in the labor market, she didn't ask about the labor market. She's saying, how can you even suggest that you're going to cut rates right now? That's where she was going with this, right? And when he's saying, well, we'll take things as they come. Who knows what's going to happen? Well, maybe you should have a clue. You're the chairman. We don't see this in the data right now. But if there was a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates again. There's nothing in the data pointing to that, but those are the things we'll be looking at coming meetings without trying to refer to any specific meeting. What is he saying? We're focused on the labor market. We know why we're focused on the labor market now. Now, what I always like to do is I like to draw lines. This is the S&P, and when we have the Fed meeting, so I always like to draw lines from that first bar and see the reaction. And then this just allows us to take a look at what the initial reaction of all the algorithms and high-frequency trading firms was doing. And they bought. And then you can see very clearly, we never got over that line, anywhere near it. If you dropped a 50% line here, you will denote that that's roughly where you stopped here, right? And I do that as well. I drop a 50% there. Okay, so this is what we have, right? And we can see that very clearly. We can see the mark. This is where he started talking about the labor market. So we're starting to drop down a little bit. He starts talking about the labor market, and that from there is where we ripped, and the rest, as they say, is history. So once we take a look at that, and we mark that particular time, just come straight across here, you never looked back. You never came close to that, right? And I think that's a very important distinction. Like, you are never anywhere near this level. Let me just show you. You never came anywhere near that again. And so once he said that, we've never come back from it. Now, could we? Sure, of course. We have some other issues that are going on out there that are obviously driving the market at this time. And we've seen that. We're watching what's happening with the bond market. All of a sudden, it's really kind of interesting to watch. But what we'll see is we'll take a look at the market and go, okay, well, we should clearly rally now on yields. Yields should certainly drop with what the Fed said, and then we're just not seeing that. Well, why? Well, there'll be something new will happen, right? And we're starting to see that with RTY. Now, even bond yields are making that RTY drop, but that's another video for another day why that happened. I obviously don't have time to get into all of it, but obviously everybody saw that. We saw that the XLF dropped, and we'll probably cover that on Monday as to why that happened, if we get enough comments on it, or if it's something that people want me to explain. Why this is dropping. Personally, I'll just get into a little bit of it. It's really because of China and what's going on over there. And we're seeing a little bit of that weigh on the market right now. But again, you can always drop comments, let me know what your thoughts are. I think it's really important to get that language and understand what's happening. And the easiest place for you to follow along with this is right up here, CME Group. Now, CME Group, right here's the link, and you'd see June up here. No place can you look at this clearer and understand this data more than the CME. It'll show you exactly where everyone's head is. So here you are in the week. Last week, there was a 55% chance of a rate cut. So this is where the target rate is right now. Again, anybody can go to this, and that's the date. And what are you seeing here? Well, that's when there was the rate cut, pardon my voice, 55%. Where are you now? 66%. Okay, so the chances of a rate cut in June after that speech went up 20%, right? If you take this, divide that, you get 10%, divide the math, you get it. So there was an 20% increased chance in a rate cut for June. That's telling you where everybody's head is. So what this means is we have to start focusing on economic data. Economic data, great, thank you. Tell me something I don't know. The old school economic data, non-farm payrolls, do people have jobs? Unemployment, we're gonna have to start looking at that again. Wages earned. All of these things are going to start playing more importance in our life. If you don't denote that shift, you're going to be looking at CPI and PPI, which are still important, but not understanding why all of a sudden the JOLTS jobs report is going to start carrying more weight, right? It's our goal to always understand what they're going to be looking for. And why people are going to be looking for that is because that nuance and that major shift in language. Now, there's several things that we need to talk about, and I really want to focus on Argentina as well, because I think that that's going to be a huge opportunity that's still grossly misunderstood. But let's focus on what's actually happening here with Micron and go, okay, well, why is this important? This is why Micron's important. Micron, think of Micron as the oil that runs the engine, and you need it, all right? It's really commoditized. There's no real like pricing power, but when it goes, it goes. And that's why people like it. As a matter of fact, Goldman had a note saying you should really be looking at this. This is the one that no one's really paying attention to. They actually were hammering it home the other day. I was really surprised by it. But this is where you must understand this distinction. So 266, okay, great. They blew it out of the water. No, it's not just that. It's that we were expecting a loss and they have a gain. We were expecting a loss and they have a gain. Forget that the revenues are up 8%, right? You can come here and say, well, they were up 3% here, and we go through that. It's still a huge deal in $1 billion company. But the real deal is the fact that that pricing power is there. Why is pricing power there? Because demand, right? There's only one reason that you have pricing power, right? It's demand. And look at how perfect this is. You undercut, and then you went from there, and now you're lifting. I would not sleep on this. I really wouldn't. This shook me out a little earlier in the day. I do have a position in it. I do like it a lot here. It's really hard to look at this and not think that this is going higher, candidly. To think that the whole semiconductor space is not going higher. But there are distinctions here. And we're going to talk about this for a moment so people can understand this. This is not going to be a rising tide lifts all boats kind of market. This is going to be kind of like kill or be killed kind of market, okay? You're going to have winners and you're going to have losers. And it's time for us to start understanding that a little bit. Not everyone's going to win. And you're starting to see that with some of these names, right? Now, AVGO had a conference this week, and it went very well, where they were showing how they are positioned and how they are positioned accordingly. And that's very different than how people thought that this conference was going to go, quite frankly, because of the NVIDIA conference this week, and people thinking that AVGO is not positioned properly. But they had their own conference, which no one paid attention to because everybody was looking at NVIDIA. And everyone thinks that he's the next Steve Jobs. He's a rock star. I've made my opinion on NVIDIA very clear last March. I still believe that NVIDIA will be bigger than Apple. I've been saying it for over a year now. So anyway, if we take a look at this, I think it's really important to say AVGO is probably going to be one of those names that's going to be around. So I will allude to where my head is. And I don't know that AMD is going to be as strong as people think it is. And I think there's some things going on here. We keep hearing about this chip, and it's coming, and it's going to be this great chip, and we're going to have huge demand. Numbers are numbers. All right. So I beat by 75 basis points here. Okay. I'm 1% growth on earnings. Then we have this quarter, November. Okay. 1% growth over. We beat by 3%. Okay. This we actually missed on the earnings front, and we hardly had any growth whatsoever over the surprise. The only reason that AMD is doing what they're doing is because she keeps talking about the future and AI and everything. And this is really important for people to get. You can see the blow off in here. You can see the blow off move and how we've been trailing down. But what we must focus on with something like AMD is the fact of we had this conference all week for NVIDIA. And there's a huge move here that if we just use our brains, we could see and go, okay, well, here's Friday and then here's Monday. Well, what's happened since this conference has gone on? Monday, Tuesday, Wednesday, Thursday. What do you have? Straight selling. Now, I thought we might break. I thought we might actually crack the 55 on Friday, and we didn't. I actually was short this on the break. I actually did okay with it, and I actually went long this as well. I'm going to walk through some trades a little bit later today because I did get asked to start following up on some of those. So I will run through some trades today and how Friday went. But I think this is really very important for people to get and for people to look at. Not everyone's going to be a winner. And this is what you should really focus on. You should focus on things like this, where you look at NVIDIA and go, because again, this is not how conferences are supposed to go. You're supposed to be sell the news events. This went the exact opposite. NVIDIA is at all-time highs, an all-time high close. Okay, just think about that. You know the conference is coming. The conference comes. everybody's giddy for the conference and trading into the conference, right? We have this pop, everyone breaks down. This is what we refer to as a control bar. We're unable, let's just walk through it real quick. You're unable to close for any significance below the control bar, but the control bar is still what? The control bar. All right, so that in a bowl of soup gets you a bowl of soup, right? But if we just mark it off, that gives you your range. That bar is in control, period. It's irrefutable. No one can really deny that. You really can't close below it. You really can't close over it. So that's your range, right? You have 100 points to play with in there. All right. What do you get on Friday? You get buyers. Well, just think about this. If you go and look at these conferences, Friday, okay, so here's Friday, here's Monday, because surely it's a sell the news event, right? And as the conference went on, they bought NVIDIA and they sold AMD. This is not going to be a rising tide lifts all boats. Okay, what you're going to see here is names that are aligned with NVIDIA are going to do well. Names aligned with NVIDIA are going to do well. And then you start looking and go, well, what's going on in the equipment space? And you start looking at Clack, Lam Research. Okay, these all went to highs after what? Micron came out, because it's becoming very clear that you're going to have to build out capacity even greater than what people thought. And that's why these names moved. Now that goes into, okay, well, does that help ASML? Well, it does, right? And then you saw these moves on ASML. So where am I going with this? I'm going to show you one thing that you can do and you can implement yourself, and you can always do this. And this is really important for people to get, because once you do this, you can do it on any sector at any time. But if you go back and you look at the conference that took place, you don't have the ability to have the research department that institutions have. You just don't, whether they're hedge funds or investment banks, right? These guys have millions and millions of dollars that they deploy. But you do have eyes. So you can go out there and say, okay, since NVIDIA's conference, which was the ultimate event, what happened? They bought ASML. Okay. What names didn't they buy? They didn't buy AMD. Okay. So you could literally go through the names and see which names got acquired and which names did not get acquired. Right? Look at Intel. Took in billions and billions of dollars in free money. And look what happened since that event. So it's telling you which ones they're selling, which ones they're not. Now, the other thing that you can do, and I do this a lot, is you can just very simply go, well, how are we doing on a relative basis? And relativity is huge, because you can actually do pair trades. And that actually takes the risk out of the sector and just gives you stock specific risk. Because what you're doing is you're just, here, I'll show you how to do it. So what you're doing here, let's go to a bear chart. I know I should say plain. Someone reached out to me and said, why do you say bear? But can't you just say plain? I guess it makes them feel uncomfortable. I don't know. I felt the need of all the things to reach out and comment on, but I always appreciate the comments. Some of them make me laugh. Some of them do. So obviously comment. Please share this video. This thing is packed with information. But if you look here and go, all right, well, what is this telling us? Well, from 24, if I went long, I'll go to 24, right? I'm going to leave that in. If I went and I bought NVIDIA and I shorted AMD dollar for dollar, did I make money? And the answer is yes. Now, why would you do a trade like this? Why do institutions do pair trades? You can see that level here. I'll bring that over. I don't know why I brought it to there. What are you up? 56%. So you're long AMD for $1 and you're long NVIDIA for $1 and you're short AMD. Apologies, I'll get more coffee before the rest of this. Once you're there, it's 56.28%. Okay. And you have no risk to the index. You have no risk. Well, you have risk to the index, but you have no risk to the sector. You have a bet on AI that NVIDIA will outperform AMD. That's all you have there, dollar for dollar. These are very simple trades to do, and it makes your life very simple when you can start doing this, because then you're not really concerned about, is the market going up? Is the market going down? No, they're going to buy the good one and they're going to sell the bad one. I'm sure going to get comments and people are going to tell me how I don't understand AMD. I understand numbers, okay? And it's very clear to me that the numbers of growth that we're seeing, and I know this chip's coming, but you know what? So's Christmas, right? So for what I need to do is I need to make money now, not the hopes, dreams, and prayers, right? And that's what your goal is. Your goal is to make money. So when you start to see these divergences, you can either profit from it or you could listen to your ego. One will make you money, one will not. We need to talk about Argentina. Now let's talk about why investors should be watching this guy extremely closely. Argentina dollar bonds hit record highs as Malay rally powers on. So obviously the world's all watching this, and we're watching this gentleman who has been elected to power. And please note the date and time of this article written by this gentleman as we get into the details. And this is from Reuters, but it really focuses on some core issues and understanding macro analysis and how you can benefit it and how you can take this trend and actually make money from it. So that's what we're going to get into here because this is a relatively simple trade. Argentinian dollar-denominated international bonds were set to post another week of gains on Friday, with the 2029-2030 issues close or at record high prices. Now, the first thing people will say is, I'm not going to buy those international bonds, so why do I care? We're going to get into that. The bonds have rallied from lows that took 230 to 18 cents in mid-July. So the 230 issue was trading at 18 cents. They were issued at parity. Parity is going to be 100 cents. So they were trading at 18 cents on the dollar, which means nobody thought in a million years that they were ever going to get paid on these bonds. Right? This is when you see these guys that go out there and buy distressed bonds and they make a killing because they go out there and they buy these things at 20 cents on the dollar. And if the company gets its act together, or the country gets its act together rather, doesn't really matter country or company, they'll buy these bonds, they'll renegotiate the bond prices, they make a killing, and while it's still going on, they're getting payments. Okay, so think about these bonds, and let's just say they were paying 5%. I don't know what they're paying right now, but let's just say they were paying 5% and you're buying them at a discount like that. You're getting 25% on your money, as long as you get paid. If you don't get paid, you have a problem, right? But if that's what's going on, then you're getting 25% or whatever on your money, and then they 4 times themselves if they go back to parity. So just think about the lever of that on a margined account, and then think about how these guys are doing it with literally billions of dollars. There's a way for us to benefit from this, and I'm going to walk you through it. Investors' bets on the administration that the president, in power since December, please note the time, will be able to successfully transform the Argentine economy. Okay, so this guy started in December. All right. And we already have the bonds at record highs. Now, he's made it very clear that he's going to tie himself to the U.S. and the way that the U.S. does things. But he's obviously a little bit more of a libertarian than what we have going on here. We'll see how that goes. And he's got some real hurdles to jump through, certainly. But the ongoing rally has brought the 230 maturity to historic highs. So this maturity, and we're just going to go through this, okay? So this is before he's in. Right in this area. All right. And we can just kind of see where you're at. You're trading 20, 30 cents on the dollar. And then you have this period down here where you're actually at like 18 cents, but he gets in and then all of a sudden we're 20, 30 cents on the dollar. So since he's been in, and we go from here, I'm going to say 20, 25 cents. We'll just draw the line over so you can see where we're at. All right. Okay. We'll call it 25, make it simple. And then we'll just come over and we'll draw it here. All right. And we'll just say up here. Okay. So you have a double in a year, in less than 3 months on a bond. All right, and then these obviously denote the maturities of those bonds. All right, again, this is from this gentleman and it's from Reuters. I think it's important for people to quote these sources. But what's important about this, in 3 months, you're up over 100% and you're getting payments. It's nice to get payments on your bonds. And there's some other core things that are important before we dive into this. At the index, Argentinian bonds have gained 60% since he was elected. Despite the strong move over the last few sessions and the potential volatility around the ongoing political negotiations, we think newly established levels can be consolidated. This is fancy bond speak from an investment bank analyst that is very simply saying we think they can hold these prices because we understand that they've gone up a lot, and we understand that they're going to be volatile. He's going to have wins and losses. But we do see this as positive, and we do think that these bonds can be consolidated. Okay, he's made austerity a focus, taking office, helping the country post its first monthly fiscal surplus in over a decade in January. Okay, so we have, if you think about it as a company, not a country, we have a company that was supposed to lose money. Take Micron, right? They were supposed to have a bad quarter. Instead, they made money, right? So what happens here? Okay, so now you're supposed to lose money. Now you're making money. Investors are pleased, but cash-strapped regional governors and poverty-weary unions threaten a fragile balance, right? Okay, so maybe the issue's there and not with what he's doing. Now, Argentina's country's risk at multi-year lows. What does this mean? It means Argentina's risk right now, risk of what? Risk of default. Pardon the coffee, but it's early at the time recording this. So we have the spread at the tightest since 2021. Remains comparatively elevated. All right, well, what does this mean? Well, here's Argentina, here's El Salvador, Egypt, and Pakistan. Now, I want you to take a second and just look at where and how they've been utilizing this country and how they have it lumped in with El Salvador, Egypt, and Pakistan, right? Just think about that for a second. Then just take a look at what's going on here. And now look at the spread and where you're at, okay? So the spread on Argentina, okay, is wider than El Salvador, Egypt, or Pakistan. Just think about that for a second. I thought this was absolutely like just shocking to me, because this is not something that we're always looking at. We're not looking at emerging market spreads, right? This is not something that, we're looking at as, U.S. equity traders all day long. But if someone said, hey, who's got more risk right now as a country? And I gave you 4 names: Argentina, El Salvador, Egypt, and Pakistan. Would you think that Argentina has the most risk? I would not. I would not think that. That would not be on my bingo card, just for whatever it's worth. You're welcome to comment below if you would have thought that or not, but I would not. Now, why do you care about all this? Like, why do you care? You just want to trade U.S. equities. This is why you care. Okay, so this is from August 2023. Remember, he's in office in December. And what you're seeing here is you're seeing the reason by Finch, a bank or a bond, well, they rate bonds. The Finch will do more of the international. And this is from Finch. But this is just an interesting clip, and I wanted to get it out there. And it's from August 17th, 2023. Banco Argentina. Okay. So BBAR. And we're going to get into some of these banks. Key drivers: challenging operating environment, BBVA. Rating drives the CCC- rating, capped by operating. I mean, this is junk on junk. Okay. Is capped by operation environment. Fitch's view, regardless of overall adequate financial condition. Please listen to that. Even though the bank has good overall adequate financial conditions, the bank's ratings are highly influenced by Argentina's foreign currency and still volatile OE, which has clearly skewed to the downside. Weak macroeconomic favors below CCC implied level is highly influenced by Finch's assessment of the challenging operating environment, OE, operating environment. What's the operating environment? That's the country you're in. The OE in Argentina remains very challenging due to its very weak macroeconomic factors. What are you talking about? Right now, if you go now and you go into January, what are you talking about? Because they just had the first surplus they've had in a decade. What's going to happen when these rating agencies start raising from CCC to BBB-? See, there's a group out there. Okay, when you start looking at bonds, when you're breaking, and they call them fallen angels, and basically you're looking at corporations that have gone from having investment grade up, right? When you go into junk and you rally out of junk, they're the companies that you want to look at. That's where these banks are heading. Now, it will take time. It's going to take more than 3 months. But if we start saying, okay, well, thank you for that history lesson, how do I benefit from it? So what you're going to start seeing is this transform into equities. So this is when the gentleman got elected, the president, and you can see that we've just been building this base. Well, now we're hitting a level up here where this is a new weekly close, as we're starting to see more and more of this flow down into what? The stock market. Okay. So how does this benefit? How do bonds benefit? Well, you can borrow at lower rates. The U.S. government would not be able to sustain itself if it had to borrow at Argentina levels. It just would not be able to sustain itself. Everything would just literally collapse, right? It's not sustainable. When we look at something like this and we can see how we're rallying out of this break on a weekly basis, well, this makes sense because now we understand the macroeconomic levels behind it. Well, where can this go? I don't know. Where can a country go that's trading at junk and that's now starting to hit at a surplus? Okay, what happens first with companies? This is even with companies. You always look at the debt. If the debt is getting destroyed or the debt is starting to rally, it's a matter of time before you start to see something else rally, i.e. the stock price. This is a very long-term way to look at things. I get a lot of comments on, do you look at long-term ideas? Do you look at short-term ideas? You're just a day trader. Far from it. A lot of these videos and even things you'll see today are day trading, but when you can find a theme and jump into the theme, whether that is AI, whether that was China back in the day, whether that is going to be Argentina, which I do believe that it is, and we've made some bets on Argentina and done quite well with them. But when you start to see this, it puts you in a position of power. So then when you start looking at names like BMA, for example, and you start seeing how these names are like rallying and people are like, oh, well, that's clearly over. Is it? Is this really over? Okay, now, I don't know that I'm going to be jumping in there and saying I have to get involved right now, but maybe on these pullbacks, you'd be looking at them. So then you go out there and you realize that you were estimated to make $2 and you made $8. What's going to start happening to the debt of these countries? And that's what that's truly what I don't think people are getting yet. Like, what's going to start happening to the debt of these companies? Okay, they're not going to be CCC-. That's not going to happen anymore. they're going to start ranking them, but they want to make sure that they're sustainable before it happens. Okay, so here's November. Okay, this is before that gentleman was elected as president, and we're making 37 cents. After that guy is elected as president, and they're making $8. It's not rocket science when you start looking at these banks. So BMA, now this is not the one that I'm in, but I will get to that one in a second. And this GGAL, you can see this as well. Now, again, what you're looking to do, and I don't know when they're supposed to come out with their other earnings. It looks like they're going to come out in May. So you just saw how the other one did. And you don't know if they're going to take write-offs and how they're positioned. But you can see here back in November that everyone's like, oh, GGAL, not going to do too well. Okay, well, this guy just got elected. So now you have to see what the next quarter is going to bring. And if you take a look at BBAR, and again, I think this is important to state, you don't know how this is going to go. But here we are in November. We're making 15 cents. Okay, well, we were supposed to make 41, but we made 15. Okay, well, what did we make this quarter? Well, we were supposed to make 9. We made 28. Do you see the difference in what's happening to the entire banking sector in Argentina? Who do you think owns Argentinian bonds? That's why this is so important for us to understand. Argentinian banks own Argentinian bonds. I mean, it's no different than here. So when you start to get that, you go, oh, yep. So not only are you going to have access to more capital across the world, not only are you going to be able to start partnering with banks that are in the US, right? Not only are you going to start lending more money because you're going to start growing real businesses. What else are you doing? Oh, our underlying assets just doubled because they're the ones that own the 230 bonds. Who else do you think's out there before this gentleman became into power that was buying these bonds? So BBAR was one that we bought back in here. I think we paid $4.40 for it, something like that in November, or $5, something like that, but we're close to a double in it. I haven't sold a share. I have no intention of selling it. So these are long-term ideas. And I would say that if you really don't know which way to go with it, I started looking at YPF2 and been playing with that one. And you can see how that's going as well. I mean, you're breaking out here and you can see what happened the day that this gentleman, all this happened. And you can see how this rallied and now you're breaking out. And obviously oil names and energy names are very strong. But if you don't like any of the banking names and you don't want to get involved in that, you can just really just go and take a look at the ETF. I mean, it's very hard to look at this and the underlying assets of this country. And people are saying, well, I don't know he's going to turn it around. Well, he's got a surplus in 3 months. So maybe he's got a shot at turning this around. You never know how this stuff plays out, but it's certainly shaping up for the banks and the country there and the people that are there right now. Hey guys, so I want to go through a couple things here. I got asked for an update on the account. I want to go through this account so people get it. This account started with, I think, like about $1.70, and this account I actually have entered this one's actually entered in the US Investing Championship. This is a day trading account that I have it set up that way. It's linked to the Alpha Chaser ideas, and so people have found this helpful. That's why I'm doing it. I'm being really clear about this. This is one account. This is not how I trade everything, right? So take it for what it's worth. But that's where we are. We're up over 100 and something percent, I guess, in the account now. I have to do the math. But that's what we get per trade. That's the profit factor. That's the win rate. This is really important. People are always shocked by this. Like, wow, you don't have an 80% win rate? Shocker. No, nobody does. The people that say they do run away screaming. Here's your average win, average loss. And I want to point out a couple things here. So, and I want to walk through a trade too. I want people to understand where the majority of profit's coming from right now and why you're probably struggling. There's something really important here I want to go through, but I want to go through this too. So that's where you're at year to date. Now, if we take a look at this, what we're going to do is drop this from February 23rd to 23rd. All right, 23rd to 23rd. And you're in the past 30 days, you're up about 75. All right, so that's where you're at in the past 30 days. Drop it to March, okay, and you're at 62. Now, this is what I want people to get. Take a look at the percentage, okay, and look at what's happening to the win-loss, all right? And now you start to see losses, right? Now, this actually wasn't as bad. This was something I carried overnight. Actually, I'm doing fine with it, but like it just read really bad that day. It doesn't really matter. Anyway, point of getting at this is starting to get worse than the year-to-date average, and hopefully you see that. So I'm going to go back to that and show you again, okay? So that's all worse than the average on the year. Now, if you look at the graph right here, what you'll note is that it's getting worse. Why? Market's changing. March was hard. So if you're struggling right now with March, understand that March has not been easy. You've had a lot of data that's coming out with March, and it's hard. But when this starts to happen, and my win ratio drops, and the trade expectancy drops, and the profit factor drops, I don't press the bets. I go the exact opposite way with it. This is a really important concept. Okay? When things are going well, I press, and I press heavy. When things are not going well, I start reining it back in. You're not seeing as much follow through. All right, you're just not seeing as much follow through now. So take that for what it's worth. I got asked for an update. That's why I did this. I'm more than happy to do this. I'm going to do this less. I started doing it almost every day so people could see it. I'm going to do it less because I think people get too caught up in the numbers. But the important thing is here, when this starts going the opposite direction, we're going the wrong way. How's he know where we're going? If you know what movie that's from, comment below. But if you look at this and things start going, hey, this isn't going my way, you put the brakes on a little bit and you go, okay, well, let's see what's going on here. What am I wrong about? All right. I do want to walk you through something. Now, in front of you is Thursday, and I don't have time to edit all this out, but I do want to get into this. And I always want to show you something. So Thursday, we're up 16.9, right? And Micron, here's the trade. The majority of the gains that you're getting on the market, the majority of gains that we're getting here, it's all coming from understanding fundamental research. All of it. And after you understand fundamental research, it's overlaying that fundamental research into these earnings calls that you know what you're looking for. If you don't understand fundamental research right now and these earnings calls and what's happening on the calls, why this one's going up on the calls, why Nike's dropping on the calls, why Lulu's plummeting on the calls, why Micron went up, why Dell went up. You remember the trade I showed you a month ago on Dell? If you're not understanding that, you're missing the market. This is a very different market than you had 3 years ago. I'm not going to say because of 1.7 trillion. We're not going to say that anymore. But why this is different is because it's being driven by earnings. And if you don't understand what to look for in an earnings report, you're going to have a really tough time. I think what we're going to start doing is we're going to start doing some of these calls live, maybe on a Friday night. Comment below if you think it's a good idea. But I'm thinking about just doing live calls where we just talk about, hey, this is what you need to look for in an earnings call to make sure that these points are getting across. That's where I'm thinking of going with it, but your comments are appreciated. But the majority of money that people are making right now is on the earnings. That's where it's coming from. It's coming on the earnings calls. So if you don't understand those, you're missing a huge part of the market, right? People absolutely slaughtered it on Nike, absolutely crushed it on Nike. I was just screwing around after hours, put a toe in the water and then just blew it out. But the Microns where I actually killed it. And then the Lulu obviously blew up as well. So keep that in mind. You need to start learning the fundamental side of this, not just the technical side. There's a reason why the stool has 3 legs to it. Again, there's a reason why Lulu's down. There's a reason why Nike is down. Okay. These are earnings driven disasters, just like we dropped right here as well. We want to understand why they're dropping so that we can benefit. We want to understand why they're going up so we can benefit. I can't stress this enough. There seems to be, I got rid of the wrong thing there. Let's hopefully load that back in. Perfect. Boom. So what we want to focus on here is we want to focus on the fact of fundamental analysis, earnings, how to read a balance sheet, what's important, what's not important. I'm more than happy to help that. There's probably books out there that go through it as well. There's a couple. The Hedge Fund Edge is a really good book on that. You could read that as well and focus on that. But even understanding this, how one company ties their profit center to one country, i.e. China, for example, and then when that starts to go belly up, they run into a problem. Even understanding those nuances make a huge difference. If you understood these earnings and what I'm trying to explain, you would know that once this quarter happened, that's why the stock has never come back. And this can save you an inordinate amount of money and also make you a lot of money by understanding fundamental analysis. That is it.